This is your LMAX Exchange technical update for Wednesday, December 21st, 2016. Euro dollar. So the euro remains pressured to the downside after the market recently took out some critical multi-year support from that 2015 low in the 104.60s and breaking down into the 103s thus far. The market has stalled out by some key internal support going back to 1997, which comes in at 103.45, with the market stalling just shy of that level at 103.52 on Tuesday. However, the downside pressure does remain intact and there is risk for a move down towards parity now. At this point, any rallies are classified as corrective, and only back above 108.75 would take the immediate pressure off the downside. Sterling dollar. So cable remains pressured to the downside overall, with the market confined to a downtrend while it holds below a previous base at 127.96, and from here there's risk for a fresh drop to retest the 31-year low that we saw earlier this year, down just below 120. Initial support, however, comes in at 123, and we would need to see a break below that level to accelerate declines. Dollar yen. So dollar yen has recently traded up to fresh multi-day highs at 118.67, and there is risk for continued upside as this market continues to show no signs of any pullback, with 120 the next major psychological and level of resistance. That's 120 area also coincides with the 78.6 Feb retracements off of the 2015 high to 2016 low move. At this point, we would need to see a break back below 116.55 to take the immediate pressure off the top side. Euro Swiss. So Euro Swiss has seen a bit of a bounce in recent trade, but overall the pressure here remains firmly to the downside, with the market seen retesting the 2016 low from earlier this year back in June at 106.24. At this point, a break back above 109 would be required to take the pressure off the downside. Aussie dollar. So Aussie is firmly focused on the downside here, with a retest of next medium-term support at 71.45. That goes back to the low that we saw back in May. At this point, any rallies are classified as corrective, with only a breakback above 75.25 to take the pressure off the downside. Dollar CAD. So dollar CAD remains confined to a very well-defined uptrend. The market has most recently put in a higher low potentially at 30.81, which will be confirmed as it breaks back above the recent highs that we saw back in November at 35.89, opening the door for a push towards 140 further up. Kiwi dollar. Kiwi remains confined and pressured to the downside, with the market now focused on a retest of medium-term support in the form of that 66.76 low going back to May 30th. At this point, rallies are classified as corrective, with only a pushback above a recent high that we saw around 72.40 to take the immediate pressure off the downside. SPX 500. The S&P 500 is consolidating off its own fresh record high that was seen last week. At this point, the pressure remains firmly on the top side, and a breakback below 22.47, 22.48 would be required at a minimum to take the immediate pressure off the top side and open the door for some form of a correction. Until then, there's risk for a fresh upside beyond the recent record highs that we saw around 22.80 towards 2300, that next key barrier further up. Gold. So gold is traded down and has been under intense pressure over the past several weeks. The market trading down to some key support in the 1120 area. 1120 represents a key 78.6 Feb retracement off of the 2015 multi-year low to 2016 high, and the market though still remains under pressure and will need to take out some resistance, which comes in around the 1143 area to take the immediate pressure off the downside and suggest that we could be basing out. Until then, there is still risk for additional declines, though again, we have come into some critical support in the 1120 area, and this market is oversold on the daily chart. That's all for now.